following program has been rated GE. It is therefore suitable for general viewing.
Hi and welcome to the Trading Bell. Now, I&M Group has come to the market with a 20 billion media-term note program. And of course, why are they here? We don't know. We shall be getting to understand that. I'm seated with the CFO, David Ngata, to help us understand why they have chosen to come to the market at such a time as well. Welcome to the Trading Bell.
Thank you so much, Maina.
Yes, good to see you, David. Yeah. So let's get straight into it. And the simplest question is, why have you come to the market with this medium-term note?
Yeah, why now? So this is part of our overall capital planning. Why we think this is the opportune time. If we dial back to a year ago, credit to the private sector was 0.2 percentage point. Based on the latest central bank reported numbers, that has grown to 8.1% percentage points for March 2026. And it's anticipated we're going to be having a continued deepening of the credit to the private sector. And therefore we needed to do this capital raise to be able to get subordinated debt to support lending to our customers. So the subordinated debts from a central bank regulation perspective, it counts for total capital, and that's really the critical number when you're lending to a single customer.
Excellent and lovely. Of course, such news excites me as well, because from the market side, it's nice for us to have such activity. Let's move on to the purpose, define why you want to raise more funds. As a bank, we have seen the growth. I think recently I had a chat with the CEO as well on very good full year results. So why more?
Yes, we are excited. So we are excited about the growth and about how our strategy is resonating in the market.
Excellent, yes.
So why more? We have had medium term and subordinated debt before. We actually do have about 50 million that we have from one of the DFI providers, which will be maturing in 2028, March of 2028, and actually begins to we begin prepaying fourth quarter of this year. And then we did have a medium-term note, which was foreign currency based, which matured in first quarter of last year. So when we look to the maturity ladder of subordinated debt structure, this is the appropriate time such that by 2028, this capital will be seated with us. It will be working for us. Even when then in March 2028, we repay the existing one.
Excellent. Lovely. Let's now go to some of the intricacies behind the figure.
Sure.
One of it would be the 20 billion that you want. You've said you want to give it in, to receive it in 2 tranches. Could you explain that further?
Yes. So it's a 20 billion program. Right now, we are here for the first tranche of 10 billion with a green shoe option of 30%. That means from a successful issuance, we can get 13 billion, and then that will leave about 7 billion that will come back to the market under the same term note structure. So what that does is it does help us support the market, and it helps us meet our immediate capital needs. And then, as I said before, then as credit continues to expand, we would be having that opportunity to come back for more to again support our customers.
You know, David, previous corporate notes have been oversubscribed, and I'm sure you're confident because of your fundamentals that probably you will also get the same thing. What will happen if you get 30, 40 billion?
30, 40 billion? I wish we can keep it all, but unfortunately, we can only take 13 billion.
Yeah.
So under the CMA regulations, the green shoe option, the maximum you can take is 30% of the initial tranche, which is 10 billion. So. 13 billion will be the maximum.
All right. Yes. So we will talk to customers about how they can participate in this. But before then, let's talk about where you want to focus your funds. I think when I read through, you talked about, lending, growth, and tier 2 capital. I wanted to know what's the priority really on those, and maybe you could also talk about the focus on MSMEs, because I know you're also big on that. Are they part and parcel of this plan, corporates, and any other sectors as well?
Yes. So you'd have seen, and as part of our Imara 3 strategy, which is a strategy cycle we are on, growth in retail and business banking clients. Now that is accounting for 40% of our banking business for the financial year we just reported for 2025. And there's subordinated debt capital will be used to lend to all of our customers, corporate, SME, and even retail customers. We have had stellar growth in our retail and business banking business over the years, and we want to continue to strengthen that and fortify that going forward.
Okay. Let's talk about the tenure. I mean, you said it's 5.5. I mean, that's 5.5 years. 5.5 years. Could you expound? What investors are you targeting with search?
So I think this is a sweet spot tenure. So firstly, from a regulatory perspective, for this to count as subordinated debt capital, it has to have an issuance of at least over 5 years. Okay. So, but then from the GOK, the government of Kenya, which is the main issuer of debt capital, they've tended to issue long-term, longer tenure notes, 8 years, 15-year notes, and we felt there was a need for this type of a product where there's demand for it within our capital markets. And therefore 5.5 years, it matures. We go to the market now, and it will mature in November of 2031. And that does give the investors, we believe, the right tenor where it's not too short and it's not too long. It's in the sweet spot. Okay. Something that the market has been aspiring to have.
I love the one, sweet spot. Now, let me come to interest rates. And I would like you to just, because everybody is concerned about that. We have seen, especially on the government side, interest going down. But you're offering good interest. Tell us about that and ensure that you touch on the taxes there behind so that I know what I'm taking home.
Okay, sure. So the all-in interest on a gross basis is 12.2%. So after you get that, then you'll have to pay withholding taxes on that. We believe it's a good yield in coming up with the pricing. We worked with our advisors and benchmarked looked at the yield curve, what it's indicating for papers that has similar tenor, 5.5 years. And primarily, we have to take it in our market. The significant issuer of debt instrument is the government. So where are those government papers trading in the secondary market? Then beyond that, government papers will generally be viewed as risk-free, and we have our paper at 12.2. It does offer a premium over and above the risk-free government instrument of similar tenor.
All right. I love that. Let's talk more about now I&M and really endear to our investors why they should trust I&M's credit story. What are some of the things that you should be able to tell investors that, listen, this is the place to go?
So to aspiring investors, I&M is a credible tier 1 bank. We have had a long experience in issuing and holding subordinated debt. We have been in the market before. We had Kenya shilling subordinated debt that matured in 2017.
Okay.
In 2019, we came back to the market. We issued about $22.7 million foreign currency subordinated debt. That again matured in 2025, so successfully repaid. We have current one from DFI, which is maturing in 2028.
Yeah.
So we have proven experience around honoring our obligation. And we wouldn't be bankers if we were not honoring our obligations. Honoring our obligation and successfully issuing and redeeming and making all of the payments. So to any investor that is interested, I think that's not an area they should fear. Then beyond that is then how our business has been evolving. We have seen customers continues to trust us more. We have witnessed our balance sheet and our deposits continually growing 17% last year. Those are depositors' funds that we're holding. They're unsecured. And that faith and the fact that we also been witnessing increased profitability, it speaks to the soundness of I&M Bank Kenya as an issuer. And then I&M Bank Kenya is part of a broader group that has businesses in Uganda, Rwanda, Tanzania. We have strong shareholders, including international anchor shareholders. Therefore, this is an investment that is offering very attractive yield that investors should seriously consider.
It's very good that you've mentioned on your footprint, especially across East Africa and Mauritius. How will they invest? Because you've told us that this is a shilling denominated, medium-term note. So, fortunately for us, Nairobi or Kenya is a financial hub. That's it.
We do have regional economies participating strongly in our stock exchange. They participate both in equity and debt. And debt transactions. So they will need to work with our advisors, the subscription details, but the issuance is happening in Kenya, so they would need to come into the Kenyan market and invest similar to the way they have done, let's say, when we have had equity issuances and other debt instruments. So it's open for all types of investors, including the Kenyan investors in the diaspora. Similarly, they can buy this, they can invest in this medium-term note and earn this 12.2% return over the next 5.5 years.
As we come to a close, how much is the minimum investment?
The minimum investment is 500,000, $500,000. After that, multiples of 50,000 each. And there was thought process as we calibrated what the minimum investment would be. We've seen the rise in collective investment vehicles where the retail investors, most of them will be investing through that. And then beyond that, then when the issuance gets listed, it can trade in multiples of 50,000. So retail investors can get in again post listing and buy in installments of 50,000.
I love that, because I was about to ask, is this not an uphill task for the retail investors? But I think you heard it, especially through the collective funds and all that. Thank you so much for that. One more question, at least on that, especially to interested investors. How do they get onboarded in the process so that at least they can participate in this?
So the retail investor is becoming savvy. So there are two ways to apply for the issuance. One is through paper, but so you can go to our branches, or you can download the form and drop that form in our branches after you fill in the particulars, or you can do an online application. And I'm sure, given the digital survey of the retail investors, will receive a lot lot of digital applications. The main thing is beyond doing the applications is to make sure that you have a CDSC account, because that's the account then that will hold your investment. So any investor who already has an existing CDSC account, it's straightforward. Submitting and giving their CDSC account particulars. If you don't have one, then it will be good to open one, so then you can participate in the issue.
Okay, yes. And I'm sure there was a lot of hindsight behind you coming forward and saying, let's go to the market and get this money from investors. When you look at the corporate debt environment, what are your sentiments? So
we've seen a lot of activity over the last 6 months or so. I think we have had two, actually more than two. We have had about three big issuances. They've all been subscribed very successfully, and it seems that confidence that probably was there in that was shaken in 2017. It's come back, and it's coming back in a big way. And also we are seeing then the engagement both from retail and corporate investors, the amount of investment pool that is available through the pension fund system and other investors who are able to then to support big issuances. Yes. So, you know, I'm curious to ask, because now I'm already looking at the future and looking at your strategy.
So far, I'm sure there's something else coming up, because you're at stage 3 of your Imara strategy. Should we expect this to be a one-off raise, or probably a part of more capital on consistent capital market strategy going forward?
So as part of optimizing our capital management, we'll always have debt capital. So firstly, to begin with, this is a 20 billion note. So there's with the green shoe option, there's 7 billion. There's a second tranche to come of about at least 7 billion if we got the subscription to the full green shoe option. And then as we continue to grow, we'll continually reassess our capital needs and our capital structure, and make sure that we've complemented with the right levels of subordinated debt structure. That said, though, our business is able to generate it organically, internal capital generation through retained earnings. That element, we've been profitable for a long time, and been able to grow. I was just looking at the ratios, about 52% growth in our shareholders' funds over the last 5 years. So we expect that to continue, and we will complement that with the right levels of debt capital.
Okay. I'm trying to see how I can bring this on, because I am already seeing success, and I'm sure even that question is already painted for you what success looks like. And I love the fact that you have put that. I like the term we're using, the green shoe. Some people as well were laughing about it, which is now just that allowance in case of oversubscription of 30%. That's why we're talking about the 13 billion. So that being successful, one of the key questions will be 2-3 years, what will we see with I&M Group, and now that the capital will be working?
So we should see more growth. I know we haven't come out with our next strategy cycle and announced that publicly, but we're having those internal discussions, and then at the right time, then we will be communicating that to our investors. But that is anchored with more growth, better customer support. You've seen us investing in branches and expanding our branch locations, 73% as of date, and slated to go to about 77, 78 branches by the end of the year. And we'll continue with that journey, investment in technology, and all of that we anticipate to become an even stronger and better positioned economic player within the Kenyan economy.
Wow. All right. Thank you so much, Tevi, for your time.
Thank you. Happy to be here.
And looking forward to ringing that bell with success.
On the 21st.
Absolutely.
Thank you.
All right, there you have it. That's the CFO, David Ngata. Very confident about this medium-term note. It's already ongoing. First tranche is ongoing, so you can invest right away, and you've heard about the A to Z of it. Why not do it and enjoy your 12.2%? for the next 5.5 years. Thank you so much for your time. I leave you now with the markets.